Hello everybody and welcome. This is Tushar Chande. Today we're going to discuss the TrendSpider use case highlighting the great gold breakout of 2024. A gentle reminder that our disclaimer says that there's risk of loss in trading and past performance is not necessarily indicative of future results. So I've called it the great gold breakout of 2024 because we had a breakout in GLD, the Gold Spider ETF, after a consolidation lasting more than 3.5 years. It began in early August of 2020, and you see that we had multiple tests of the breakout level and barriers until we finally broke through about 6 weeks ago. So we are still on the weekly GLD bar chart, but we've added two indicators. The CHATS indicator, which is the Chande absolute trend strength indicator. In the upper panel, it colors the candles. In the lower panel, you see the line. So the value of the CHATS indicator was at 100 when we last made a significant top in July, August of 2020. And even though we have some green candles here, when the value rose above 70, it's only during this most recent breakout, that the value of the CHATS indicator has touched 100. So it tells you that this is indeed a very strong breakout with just as much power as one that led to the initial top way back in 2020. For some context for the breakout, we're comparing the Spider Gold Trust GLD weekly chart in the upper panel to the S&P 500 weekly chart in the lower panel. Observe that even though gold started consolidating before the S&P 500 finished its rally, the low in the gold prices corresponded roughly with the low in the S&P 500. As the S&P 500 has recovered to new highs, gold also recovered and consolidated before its current breakout coincided with a strong breakout in the S&P 500. So gold is behaving less like an inflation hedge and more like a risk-on, risk-off equity-related object. For more context, I show the CPI data from the Bureau of Labor Statistics, and this is roughly the area where we observed the consolidation in gold. So gold consolidated even as inflation rose and is rallying now when inflation has come down substantially. So it's really not behaving like a hedge against inflation. So on this chart, we show an application of using the Chande Blast indicator model, the buy low with adaptive stop model for trading the gold market in the recent past. The lower panel is still the CHATS indicator, but the upper panel shows the entries and exits generated by the Blast concept, and we're applying that to the GLD daily data. So Blast buys strength after weakness. So we have weakness in gold, we are buying strength after weakness, and we're getting out on a trailing stop. Again, we're buying strength after weakness, and we'll get out on a trailing stop. And the model has worked fairly well as a trading bot for gold. So this is a close-up of the most recent entry into the gold daily chart. The entry occurred within a few days of this particular low, and then we have the market following through with a very strong trend. The blue line shows us the expected performance from a typical trade, and you see that we are running well ahead of the expected performance. So this is a very good example of when Blast is successful, when we get an entry after weakness and then we get a strong follow through. So in these few trades here, you see that we got an entry but no follow through, entry but no follow through. So you do need to have good risk control when you use the buy low with adaptive stop strategy. So this chart shows the equity curve from the test module in TrendSpider when we apply the Blast logic as a bot to the GLD data. The blue line here shows that the performance of the model at 54% or so was better than just the buy and hold performance. And you see that the average win was 4.27% and the risk reward ratio was 2.31, which is pretty good, but the percentage of profitable trade was only 38%. So that tells you that you do have to have good risk control, and the model needs for there to be a strong follow through in order to be profitable over the long term as we showed in the previous slide. So this is an illustration of how we can use the arch indicator or the adaptive regression channel indicator in combination with the chats indicator to confirm the breakout. So the parallel lines are drawn automatically using volatility and linear regression, and we see that GLD was bouncing around inside the channel, and when we had this breakout, the value of the chats was close to 100 and eventually touched 100. So it confirmed that we had a strong breakout. The bars are green, and we've emerged strongly outside the slightly downtrending channel. So this is an example of combining the arch indicator with the chats indicator to confirm a breakout. So this is the daily data still for GLD, but we have shifted the location of the automatic regression channel, and you see that the regressional channel allows us to forecast or predict what the central trend line is as well as what the range might be. And now we see that we have extended past the outer edge of the upper band. So two things can happen. We can either get a retracement back towards the center line, or we could even continue much higher. So a situation to watch. And since the trend is just getting started, we would lean more towards a continuation or maybe a gentle pullback. In this slide, we've used weekly data for GLD to develop some price targets. We're using the Fibonacci extension by using the high of August 2020 and the low of October 2022 to predict some upside targets. We've exceeded the 211.2 target at 1.382, and the next two levels are 222, let's say, and 238, 239. So these might be levels to watch where we might see some resistance in the market. The previous slide, we had some profit targets, but we don't know exactly where prices are going to go. So we are back to the daily data of GLD, and we are applying my PALS indicator, which is computing the trailing stop for us. Observe how the trailing stop accelerates as prices accelerate. So we don't really have to worry about picking a top or a profit target. We'll just follow prices and eventually they will reverse and take us out. In this presentation, I've shown you the many different tools that I have developed that you can apply to the analysis of GLD or gold prices. I hope you like and subscribe, and all the tools are available at TrendSpider.com. Thank you for listening.